Good morning. It's September the 14th, 2017. Time to kick off another trading day with our disclaimer. Hypothetical simulated performance results have certain limitations, unlike an actual performance record. Simulated results do not represent actual trading. Also, since trades are not being executed, the results may have been overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact they're designed with the benefit of hindsight. No representation being made that any account will or is likely to achieve profit or losses similar to those shown. Well, treasuries are under pressure, and they didn't get any lift to speak of last night, even with the weakness in the equity markets overnight. Overnight, only the FTSE was higher. The Bank of England kept interest rates the same as expected, but did say that the withdrawal of stimulus was likely in the very near future. Now, every central bank says this. The Fed to date is the only one significant central bank that has raised interest rates. So the ECB, Bank of England, and the Fed are where everybody takes a look at Japan and China. And so far, only our Fed has raised interest rates. Two schools of thought as to why. One, so they would have ammunition when the next recession started. It looks like that will be delayed if the economic growth continues to stick in our economy. So right now, central banks are telling us that they're going to raise interest rates sooner rather than later, just not when. So the Bank of England was pretty much as expected. Today's CPI news, plus 0.3. That was the same as for Prague for PPI. Core, plus 0.2. If that comes in lower than forecast, then the Fed's ability to raise interest rates will be questioned. And then we have jobless claims at 302. Harvey and Irma will make sure these numbers are discounted or ignored, and natural gas plus 80. So the focus is going to be right here, CPI. The EA minis direction might be a factor. It wasn't overnight. So we'll see what we get. This morning, I was doing the homework. 16 to 20 looked like resistance. Resistance may be 12 to 16 right now. So a structural sell will be 12 to 16. Then 19 to 23. On the buy side, first buy is 5 to 9. Then 29 to 01. Looking at the 30-year. Um, 20 to 24 is going to be number one. 27.31 sell 1, 3 to 7 sell 2. On the buy side, 12 to 16 number 1, 5 to 9 buy 1, 25.29 buy 2. Gold was lower when I looked at it, probably even lower now. Not by much, huh? I'd expect it to make new lows, but it hasn't. So So definitely a B, definitely pointed lower. We'll make 2022 by 1. Gold got whacked yesterday 15 to 17 by 2. On the sell side, 25.27 and 29.31, sell 2. Again, I don't have a lot of feel for the euro. Fundamentally, I think the euro should be much lower than it is right now. Hasn't happened. So 1875 by 1, 1850 by 2. Sell 1900, 1910, and 1925. Crude shows some strength. We may be seeing some changes in the sentiment on crude. A couple of things have come out. The biggest one is economic growth around the world, soaking up that extra supply. Another thing that I've learned the hard way over time is that when you get to the cost of production, there aren't any sellers out there. The guys that drive the market, the hedgers. So we've had a 50 plus, 47 minus market. We're at $50, so 50, 50 and a quarter, sell 1. Stops above 50 is the play. 50, 50, 50, 75, sell 2. 52 would be the top boundary, so 50, 52 is prime sell territory. 45, 47 has been prime buy territory. And we're getting towards the top end of the range. The breakout came from 49.50. So, boy, this is very, very aggressive. 49.50, 49.75 for early in the session. That's the first time down into that area. And 49, 49 and a quarter by 2. Second time into that area. Not interested in buying 49.75. So 50, 50 and a quarter is probably the first trade that'll show up for us. And the E-mini, will it follow China's lead? The interesting thing is about China is that they'll try to tighten their economy for 1 to maybe 3 months, and then when the growth stops, they're right back in stimulating. And they spent what on paper was going to be their entire debt support for the market this year in the first 7 months of the year. What will they do? If history proves correct, they will stimulate their economy further. Well, the first trade is going to be to sell failure to take out and hold 95. Then 99.01. If you wanted a limit sell out there, limit sell at 3. Quite often we find when we take out these major market numbers that it goes 3.5 points past that, so a 25.03 would get us in. On the buy side, volume is leaning P. Volume is higher than the rest than yesterday's, which was higher than the day before, which was higher than the day before. So volume is moving up in the distribution. Expectations are for 2,500. I like the long side, not really too interested in getting short. So this 89 to 91, let them get stops below the overnight session low. Be buy 1. and 85, 87 will be by 2. Now, normally the Chinese economic data would carry more clout than it does, but what we're seeing is that the United States is breaking out from the European growth numbers of 1.5% plus or minus, and we're starting to grow close to 3% per year. So the growth cycle in the United States is being viewed differently than it was under the Obama administration. Under the Obama administration, 2% growth at best. The two engines that were going to drive worldwide growth were maybe the U.S., but definitely China's. Right now, maybe the U.S. His economy's in the ascendant, and China's economy won't be as important as it has been, and we don't know if that's true yet or not. But my guess is that people are starting to look at the United States in a little bit different light, like maybe the United States can achieve 3% or 3% plus growth. And if it does, that's a big deal. Okay, it's going to take a bit to get everything up and posted. I will get busy at that. I will be back with you as soon as possible.